This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
Thanks for being with us here on Business Now. Now, we can tell you that over the weekend there was a slowdown in buyers' appetite to buy property, notwithstanding the recent interest rate cut. But in Queensland, the cyclone and weather events were clearly a big factor. But there's also public holidays in Canberra and Tassie, in South Australia and Victoria to contend with. So across the country, there were 1,600 auctions, give or take, and the national clearance rate was 53.9%. So that's down on around 61.4% in the same weekend last year. In Sydney, 754 auctions, the clearance rate here just a tick below 58%, and also around 1,800 private sales across New South Wales. In Melbourne, only 353 auctions. That's a public holiday. Clearance rate, just under 65%, and also another 1,300 or so private sales. In Brisbane, just 139 auctions, a clearance rate 16.5%, but nobody was going to turn out, let's be honest. 982 private sales across Queensland. In Adelaide, 67 auctions, the clearance rate 67%, 260 odd private sales. And in Canberra, 58 auctions and a clearance rate just under 71% with 99 private sales. So let's bring in here Angus Moore, senior economist with REA Group. Angus, look, home sales do look pretty weak, but on the other side, you've done some research and that's showing that rental affordability is the worst it's been since 2008 when records started to be kept on all this.
Yeah, that's right, Russ. It's a pretty challenging picture for renters at the moment, and it's really not isolated to one part of the country either. You know, right around Australia, we're seeing just very challenging conditions. We're out today with our rental affordability report, and what it does is look at the share of rentals that households right across the income distribution can afford. And the short answer, as you say, is right across the income distribution, renters have never been able to afford so few rentals as they have today.
Okay, so that begs the question as to whether more renters should be actually looking to buy into the markets right now. With interest rate cuts coming, that is one factor into affordability. Wage rises, they're going up at the moment, faster than inflation. That's another factor into affordability. And then finally, there's the home price itself. In many parts of Australia, Victoria in particular, home prices are coming down. That should be improving home affordability for more people.
Yeah, we've seen some signs in the last, few months that housing affordability will start to improve. Certainly when we ran the numbers on housing affordability towards the middle of last year, it was still pretty challenging. Home prices have gone up a lot in many parts of the country, perhaps Victoria accepted. And the fact that mortgage rates have gone up a lot has made even housing affordability relatively challenging. That said, the fact that we're going to see some interest rate cuts this year, and indeed we already have, is going to start to improve that picture. Particularly in places, as you say, like Melbourne, where home prices have been pretty soft since rates started rising. Today actually probably looks relatively better for a first-home buyer than perhaps it has. And we are kind of seeing that in the data. First-home buyers have been surprisingly active in the past 12 months or so, more so than what we saw through the 2010s. And it's hard not to think the fact that rental affordability is so hard and rental availability is so challenging isn't pushing some people who can afford to look to buy sooner than they otherwise might.
Yeah, and the real issue here is, of course, even for landlords right now, investors getting into the property markets, if those rents are as strong as they are and interest rates coming down, there is an attraction for those who are cashed up to try and get into the investment market right now.
And we're seeing that already, really. Investors are pretty active right around Australia. When we look across the states, the share of new housing loans going to investors is around 2-decade highs in most of the smaller states. It's at its highest level since 2017 in New South Wales. And Victoria is really the only place where we haven't seen investor activity pick up. There's a couple of reasons for that. One is, while Melbourne has seen really strong increases in rents, it hasn't seen to the same extent as other parts of the country. And there's also been some policy changes there that have probably chilled some investor appetite there. But broadly speaking, across Australia, we are seeing quite a lot of investor demand at the moment.
Would one more interest rate cut from the Reserve Bank change any of this?
Look, it's probably not going to not going to hurt investor demand or first-home buyer demand, but one is probably not going to, be the big thing that changes. One cut is only going to make a small difference for most home buyers, but it's certainly going to help. It is going to start to improve housing affordability and start to ease that mortgage burden.
So, Angus Moore, always good to have you in the program. Many thanks for your time today.
Pleasure. pleasure. Thanks for having me, Ross.